Welcome to Learn and Grow series. I'm your host, Vinky Loomba, a real estate investor. Like every other week, I have another awesome guest with us today. Today's my very good friend, Jorge Abreu is our guest, and now we partner on a couple deals too. George is the CEO of Elevate Commercial Investment Group and G&T Construction. George has been investing in real estate for over 15 years. He started in single family and eventually worked his way up to large multifamily properties. He is now an active and passive full-time multifamily real estate investor. George and his company, Elevate Company, have about 7,000 doors or maybe more. Data might be old that I have, and he has $500 million assets under management. And today our topic is how to maximize profit potential after a commercial real estate acquisition. We all celebrate our wins, right? When we close a deal, we post all over the social media and congratulate each other. No doubt, acquiring a commercial real estate is an exciting time, but with the acquisition, we have only won half the battle. But now it comes the real work once the acquisition is completed. And this is the time to work our business plan. This session is strictly for educational purposes and should not be considered as a legal, accounting, or investment advice. If you have any legal questions, please consult with your own attorney, financial advisor, and CPA. And this session is strictly for educational purposes only. So today, George is gonna walk us through that journey, how to optimize our profit. Welcome, George. I'm very excited to have you with us today.
Yep. Thank you, Vinky. Like you said, this has been a struggle to get us together. So I'm glad finally able to present for you and your group. So I'm going to share my screen if that's.
Yeah, let me give you the access.
Yeah.
All right, there you go.
All right. So I got a couple slides. I didn't go too nuts with this. I wanted to talk a little more freely and, take questions and whatnot. But let me see. I won't spend too much time going through who I am. Vinky kind of just broke that down a bit, but these are the companies that I own. Got Elevate, which is the company that I buy the apartments in. And then I also have the construction company, J&T Construction, as well as a coaching program for multifamily. And then if you guys want these slides afterwards, you've got my email right down here in the bottom. Just shoot me an email and I'll send it over. This is pretty much what I'm going to cover. I'm going to go through, I thought maybe I'd go through what a value add is first, and then jump into what we do once we acquire one of these properties. Like I said, I'm not going to explain too much. This is pretty much breaking down what Vinky said. Been in real estate for a long time and 100% focused on multifamily now. This is my team and what we've done. Actually, the numbers here are not accurate either. I need to update those, but we're over 7,000 units now acquired. We've exited out of some of those, and I think we're closer to about 500 million in assets under management. Just a little bit about the construction company. We do pretty much everything multifamily, renovations, ground up, you name it. Just some quick before and afters showing you, what we've done and how we have added value to different properties. This is one that Vinky's actually a partner on in Augusta, Georgia. And then we definitely like to rebrand and paint the exteriors, really change the curb appeal. You can see that here, pretty dramatic. There's another one. This is a larger, heavier lift where we're taking some hotels and converting them to multifamily. And then, so value add, right? What's a value add deal and why do we like that? Why are those the type of multifamily assets that we go after? So just to keep it simple, I know most of you probably know that the way we determine the value for multifamily is the NOI divided by the cap rate. So just to give you an example, if you've got 100 units and you increase that rent by $100, that's increasing your NOI by 120,000 that year. That's adding 2.4 million to that property. So that's why we like value add, because we can force the appreciation, we can bring the value up by either adding income or decreasing expenses, right? Either or. So this is kind of just pointing out some of the, what would be a good value add. Is something that the easiest thing is the rents. If the rents are clearly under market value and we feel confident that we can come in and raise those rents, that's a simple value add deal. This is just saying that if it's dated and we can upgrade the unit, that's another way for us to add value. Essentially, value add gives you more control. So right now, right, we're in a possible recession or heading towards a recession, whatever you want to call it. If your game plan is to bank on appreciation and the market driving the value up, you're not going to do so good right now. Like if you need to exit, you're probably not going to be getting a lot of appreciation in the next year or two. And that's where value add comes in, right? So if you're able to push that value, then that's a different story. Then you could possibly exit in a year or two, and not be so worried. So a cookie cutter value add deal, I call it that's your typical, maybe a older property, hasn't been renovated. It's all classic units. You can come in and do a percentage of those units, upgrade them, get the higher rents, and then turn around and sell the property at a higher value. Those have become very hard to find when the market was hot. And now that it's kind of slowing down, like I just mentioned, it's a little harder to flip something quickly. So those value add deals are not so much there right now. Then you got your deep value add, which is going to be like a heavy lift, where I mentioned the hotel to multifamily. That would be a deep value add deal where there's going to be a large construction piece to it. And then new construction, that's probably the most value you can add, right? You take a piece of land and then you build something onto it. And then I also mentioned here the conversions, hotel to multi. So I know I'm going through this kind of quick. I just want to make sure we got enough time. This is just to give you an example, some of the current deals that we have and the different value add type of deals. But, starting with the new construction. So this is just piece of land right now, and we're finalizing the permits with the city, and we'll break ground pretty soon. This one right here is a value add deal that we just, we actually closed on this now. This was written before, but we closed on this about a month ago, straight from the developer, and we're going to be adding 150 or more to the rents and also some other income. So not a heavy lift, but still a lot of value to add in those type of deals. We've got, this one is more of the cookie cutter. It's a older property, pretty much all classic units. So we're going in there, upgrading the units, and we're getting, I want to say somewhere from 300 to 500 rent bumps. And then this one down here is the hotel to multifamily, which we should be closing that in a couple of weeks. We've been working on getting it rezoned, and we've got them all rezoned now and should be closing soon. And then I got one case study for you, which is that same deal that I said Vinky was a partner with us on. This was a cookie cutter value add, I would call it. You know, it was all classic units. As you can see, there's nothing pretty about it. So our business plan was to come in here and do a quarter of the units and then turn around and sell the property. We did just that, and we sold it right after the 1 year mark. We were able to more than double the return on our investors. And you can see the difference we made as far as the way the property looks and whatnot. So some other strategies to add to increase your NOI is adding washers and dryers. That's always, we found that residents will pay extra to have that and not have to go to a laundry room. Additional storage, garages or storages, those are usually in high demand. What is this? Yeah, just making sure that you're collecting fees and you're charging the fees. A lot of the C-class properties we've acquired, you know, it's just been poor management. You know, pet rent, not charging pet rent, or adding covered parking or charging for the covered parking that's already on site. Cable and internet has been a really easy one to implement. You work out a deal with AT&T or whatever provider where they give you the internet for a certain price, and then you give it to your residents. You mark it up, you know, $30 or so, and that adds up pretty quick on value. And then you got mail rooms, renters insurance. You can actually get profit sharing from renters insurance as well. Amenity fee, if you think you can add it on there, definitely something. And then adding additional units is huge. We've done that a lot, where we've taken spaces that are either being used for storage or leasing office, or we've taken, even at one property, we took 3-bedroom units and we split them in half. So we took about 40 of them and turned it into 80 units. So a lot of ways to add value is pretty much what I'm getting at there. And then, so once you've got your business plan and you actually close on the property, this is the way to maximize your profits. So, you know, you could have take the same property closed by one operator that does a poor job in executing the business plan and doesn't really push the management company and just kind of rides the wave. You know, maybe they're lucky in the past couple of years, they would have been lucky for sure with the market. And they turn around, they sell the property and they get their investors, let's say 50% return. Well, you can take that same property and have another operator come in that really has the process down, is, you know, pushes the management company, tracks their KPIs, does an excellent job in implementing their business plan, and same time period, and they can turn around and return over 100%, let's say. So I think a lot of the things that don't get discussed is what happens after you close on a property. Like Vinky said, you know, everybody loves posting about, we just closed this property, we just closed that property. But not a lot of people talk about what it takes to actually implement a business plan and execute. So some of the stuff that we do, you know, when we close on a property, first thing we do is we have an on-site kickoff meeting where we meet with ownership, obviously, the on-site team, the construction team, and regionals. Let's say if it's a regional manager, we all come together, we get on site, we review the business plan. We spend somewhere between maybe 3 to 4 hours going through the business plan, understanding exactly what kind of rents we want to hit, what other income we want to implement. We walk the property, we walk the units, we go through the CapEx scope of work together. We go through the logistics of how we're going to get that CapEx completed, you know, all the way from where the dumpster is going to go to where we're going to store the materials to who's responsible for what. You know, we do a unit tracker for all our properties where we track the renovations for each unit. And then the property manager is responsible for filling out a section of that. And then our construction manager is responsible for filling out another section of it. So we kind of go through all those things. We make sure everybody leaves that meeting on the same page. Everybody understands what we're trying to accomplish. And then we begin to track that, right? You know, we have a weekly asset management meeting every week, same day, same time. In that, we also go over the CapEx as well. So we'll have our construction manager jump on in the beginning, and we'll go through any of the renovations that are happening at that time and kind of just make sure everything's running smooth. And then we go through the asset management and the KPIs. And we make sure that we take notes, we track everything. If there's a task to be done, we assign it to somebody, and then the following week we're following up to see if it got completed. If it didn't, we've noticed that's huge. Like, there's a difference from having a meeting and talking about stuff, and then the next meeting you're talking about stuff again, still not getting done. It's different when you are actually tracking it, and eventually you'll see that things start getting done because people get sick of saying they haven't done it. So some of the KPIs we track are lease trade outs. So that lets us know, make sure that we're increasing our rents as we trade them out, right? Our renewal rate, our vacant units, like how many vacant units do we have? How many of those are ready? How many of them are not? The rents that we're shooting for on the market, so our market rents. You'd be surprised on how many management companies don't really, one, they don't know exactly what rent you're trying to go after, and then two, they really won't push. So another thing we do, which I think I have listed here, is so we do a monthly market survey. So unless you, and I'm assuming when I say this, I'm talking about third-party property management companies. So unless you ask them to do a monthly market survey, they're probably going to do it quarterly, maybe. And especially now, the way rents have been increasing and whatnot, you want to have your finger on that, and you want to make sure you're staying with the market, that you're not getting all this loss to lease by not changing your rents. Collections is huge. Delinquency, making sure evictions are getting done. I mean, I can't tell you how many times the management company just sits on evictions and they don't evict them. And next thing you know, a resident's 3 to 4 months behind rent. They're not going to catch up, and they're just there. So those are the things that we track on a weekly basis, and we make sure that they get done. It allows us to make real-time adjustments. So if we notice something's not working, if we're not leasing units at a certain rent, then we can make some adjustments. Whether it's a concession or lowering the rent, or give you an example, we're one of our A-class properties, we're having trouble leasing a certain unit. It was a larger 2-bedroom unit. And we noticed that the difference between the larger and the, I guess, standard size 2-bedroom, it was a large difference. I believe it was like $300. And there wasn't enough difference for somebody to, if they're viewing the standard one and viewing the larger one, it wasn't enough for them to want to pay that difference. So instead of just saying, okay, well, we got to lower the larger one, we actually increased the rent to the standard one, and that helped us rent out the larger one, because at that point the yield wasn't that much and it made sense to just get the larger bedroom or the larger unit. So just keeping a finger on things like that, and being able to adjust. If you're going off of just monthly reports that the management company gives you, or even worse, quarterly, your adjustments are late, right? You know, those numbers are in, that's it. So, you know, that goes back to adjusting when needed. I talked about the market surveys and how important that is. Other income, you know, the better we've gotten with asset management, the more we've been able to implement profit sharing with different vendors and just other income that wasn't getting captured before. Tax protest is huge, you know, making sure that you know when your taxes come out for each property, when that protest date ends. Same with insurance renewals. So we learned this the hard way, where an insurance agent let us know, I think like the day before, that our insurance was going to increase by, I forgot how much, but we had no time to react. So now that's in our calendar, and we get a reminder for each property, like, hey, our insurance renewal for so-and-so properties up in a month. Let's start looking at that and seeing what we can do and make sure that, you know, we don't get hit with an increase in insurance. Yearly broker opinion values. So this is important as well, right? We want to look at exits or refinances every year and see and time it correctly and make sure we do whatever's best for our investors and getting them the best returns. So every year we're looking at each of our properties and seeing, hey, is it a good time to sell? Is it a good time to maybe refi cash out? So, you know, it's a lot. There's some things I definitely didn't cover, but it's not easy to be a good operator. Like, and I don't think that gets spoken about enough. And I think, let me see what other slides I got here. I've got some bonus slides in here, but I don't know if I'm going to really go through this. Probably better to open it up for questions. But if you ask me for the slides, I got how to hire a contractor, some other ways to add value, I believe is what this is. Yeah, some more value add items and some upcoming events that we've got, some recommended books, and there's all my contact information.
Glenn, go ahead.
Yeah, I actually have a couple of questions. First thing was, you mentioned renters insurance. Is your property management, are they also brokers, or do y'all outsource that to invite brokers into whatever area you're at to underwrite the renters insurance? How do y'all handle that? Are you able to hear me?
Yeah, it was a little bit lower. I turned up my volume.
Let
Yeah.
me get closer to the mic. Sometimes that helps.
Good idea.
Yeah.
Yeah, but
okay,
I heard you. So you
On the insurance, how do y'all handle that? Are you, one of you guys, your team members, are you actually an insurance agent, broker, or?
No, absolutely not. We bring in a vendor that specializes on renters insurance.
For that area? Okay, are they on site, or are they just remotely and just have the contracts available or whatnot?
They're not on site, so I mean, it's just we require renters insurance. We can't force what renters insurance they use, our residents, but we can force that they need to have renters insurance.
Okay.
And then we just tell them, hey, look, this is the company that we recommend. Most of the times they're going to go ahead and, use that company.
Yeah, it also simplifies the process. The second thing is the construction company. Is your J&N Construction, is that explicitly only working on your deals, or do they also work on other properties as well?
We do some third party. I mean, it's probably about 70% our projects, and then 30% third party.
Okay, is it one crew that goes, because I noticed how many different areas you're in. Do you have one crew that goes to all different areas, or do you just hire local talent and manage the project as it goes on in the particular MSA?
Yeah, so all my project managers and site supervisors travel. And then we do have traveling crews. So usually when we mobilize in a new location that we haven't done a project in before, we'll start the project with our traveling crews. And then
Okay.
towards the end of the project, we'll end up making relationships while we're there.
Okay, speaking of relationships, that was my next question. For like Venki has another project you're not involved in. Can we involve your construction company in it?
Sure.
Okay, that was good. Good answer. That was actually the answer I was looking for.
George is
Absolutely.
always in for any challenges, any opportunities. So I'm
I
going to
mean,
ask you one question. I'm sorry, go ahead, Glenn.
It's always great to know that, it's someone that you're actually connecting with a construction company that understands our game as well as their game. So,
That's
okay,
true.
thanks. Go ahead, Venki.
So I'm going to ask you a follow-up question, George. So is that a good idea to own a property management company for your own deals, or should you outsource or hire somebody else, which is more beneficial for a syndicator?
Look, it all depends on the size of your team, the size of starting any company. So the construction company, the management company, it's a lot of work. I mean, it's a company within itself. So if you're set up for that and you think you can handle that, it's going to bring more control for sure. Just it's also going to bring more stress, more headaches, more at the same time. But if you bring in a solid team, then I think it works. We're starting.
George, get closer to the mic.
Thank you. I should have learned from you. So I'm kind of dancing around this question a little bit, but we're starting our in-house management company. We're starting next month, taking over some of our properties. But I didn't do that till I had a proper team that was going to run it. So yeah, I don't know if that, we took it to the point where we felt we were doing the best we could with third-party property management, and we really owned the asset management part of it and pushed them as much as we could. But it wasn't enough for us, at least. I want to be the best of the best. And for me to be
Right.
that, I felt like it wasn't going to work that way.
All right, Venki, thank you for your time, man. I like this. Today was good.
Thank you. Thank you everybody for joining. I think me and George both have a hard stop.
Yeah, I got to run.
I know, me too. Thank you, George, so much. I think we'll reconnect again on the podcast recording, and we can, answer more questions there that we can share with
Yes.
everybody.